Welcome to the Forex, and here we're looking at the US dollar, and the Feds have made comments about the economy being supported. Obviously that pushes the dollar down and makes the other crosses a bit stronger. So look, the couple of points here is that the whole move up through here can be counted impulsively in terms of the 1, the 2, the 3, the 4, and we were looking for a high above this level here. Well, it's come pretty close, so we can use that as being the fifth wave here. So the move to, if we do have 5 waves here, then we'd be looking at a counter trend here in terms of 3 waves. That's the 50-60% in this area down through here. But anyway, let's just see how that develops there, but we can expect further weakness to come into play here, and of course that leaves the euro to the upside. However, we do need to get some evidence on this, and the evidence would be support on the closest largest number, so the 138 here. Obviously, I've mentioned before that the 137.72 here, the orange line here, is very important, and you can see that coming into play once again through here. But this time, last time we were looking for it on a negative process, and now we're looking on a positive process. But also have to point out too that we don't have a positive process here just yet, because we've only got 3 waves up here. We don't have 5 waves up, a very clear 3 waves there. So it can fail from here and continue to roll down. So that's why the support on the 138 would be critical, and also identifying a 5-wave structure to the upside if it unfolds, which would be the 1, the 2, possibly just the 1 of the next degree there. But in your own way, you need to sort of see that you get 5 waves here, then 3 waves as a counter trend, and then 5 waves up. So, but either way, support on the 138 will do the trick and keep the stop under whatever low comes in through here, preferably under the 50, but under the 72 would be fine as well. This market, we've been tracking it all the way down through here, as you know, and the market is deeply oversold at this point here. The momentum is still to the downside, but that takes a little while to change over. The being oversold like this snaps back first, then that helps change the momentum, but the momentum needs to change, will change as the market moves up through larger numbers, or at least moves up somewhat. So anyway, that's something to look at, the support on the 138 there. The Australian market has done pretty much everything we expected it to do in terms of viewing all this as the top of group 1 here, 93 here. The normal process is the arrival, the reaction, which normally stays above the 2, in this case 92, and then creates the first high above the level, and then has its A, B, and C across that level there as a classic trading levels pattern. So that's all going according to plan. And if I use the Elliott, then we can use this as an A and a B and a C here for wave 4. But also, and that's fine, but we'd need to see 5 waves up through here, and we don't have 5 waves up. We've only got 3 waves up. So yesterday we were labeling this one here 1, 2, 3, looking for 4 and looking for 5 to come down through here. So that counts well as 5. Then if that's the case, then we'll look for an A and a B and a C wave back up through to here, and then failing from here. So my point is that this can be still a bearish picture. We would need to see a move up to make a nice, 1, 2, 3, 4, and 5. Excuse me. And yeah, so we need that. Now, the other point here is that this rally here is probably got to do with the RBA's announcement today at 2:30, the rate announcement. So it can be very much a case of buy the rumor and sell the fact. So be very careful in this situation. In the bigger picture, have I got a bigger picture here? Not that big, not that big. This will do just for the purposes anyway. But basically, if we're looking at a bullish market, we'll see the arrival here, the reaction here, the first high above the level, then the A, the B, and the C, so to speak, and then looking for support here and then moving up from that point there. So that's kind of what we're looking at. So you can see that we've just we're in the very, very early stages of this situation here. So a long way to go to get to where we need to get to as such. But in sort of respect to that, we've got this is the Australian yen here, and we've shown this before. I think trading up to from 93 to 95, and now we're sort of above 95. Still got further to go. This is a retest of 100 here, just with that sort of picture in mind through here. Yeah, look, it's at 95 here, and also what I want to mention here is that looking for some type of corrective pattern across here before getting further upside there as well. And you can see that it hasn't really stopped at the 95 that much, so that means that it's a bit of an overshoot pattern. An overshoot pattern really just doesn't stop here, but the distance it goes above will be the distance it goes below, and then works across the level as such like that. So anyway, something to keep an eye on there. The Australian Swissy as well. I just want to bring this into the fold here because it's working across 82 here, and it does appear that we've got a three-wave correction through here. So that means that support on here, on the 82, would see a high above this one here, so you could trade it up to 83. So basically building into here would be, I can see that that's a little structure there that's not finished, like a 1, 2, 3, 4, and 5. So then there'll be the little A, B, C across here, and then moving up. So that's something to look at. And the Euro Australian, in this case, we were looking for a retracement back to the 150 there. So let's just drill in and have a look at this. Now, before I do that, I just feel that the move up we had was all okay, but I just feel it's a little bit small for a wave 4 of this degree, and a bit small for this type of correction here. So it could get larger. So this move that we've had up here, it was in 3 waves, which was fine, but it may not be, we may end up getting, something like this, a little bit more sort of complicated there. So what we were looking at yesterday, I think, is that we were looking at this 5-wave structure here, and if we get 5 waves in the opposite direction, coming from this way, 5 waves here, after a correction, it would give us another 5 waves here, and we've got that, just a little bit of a rough diamond. So now, as I mentioned, this correction could get bigger, and it would just simply get bigger in like an A, B, and C here for the A wave, then the B wave, and then the C wave here, which would be in 5 waves here as such, and then folding over from that point there. Now, that said, this move here, this was the A wave moving up through here, and this was the B wave here. The B wave's always in 3 waves, so that would be 1, 2, and 3 here as such. So it does look like it's a 4th wave and a little 5th wave to go in through here. So if we do get 5 waves down through here, that means that we're in a bearish mode. So we would get a 3-wave counter trend coming back in, and then another 5 waves of this length here coming in over here. So that's a bearish picture unfolding there, but it just needs to be confirmed. So we need to have a look at, you need to pull this apart. That's the 3rd wave. This is the 4th. There'll be the 5th wave here. Then you'll get a 3-wave counter trend, an A, a bit like this, an A and a B and a C, but smaller and maybe not getting back above the 149 there. Okay, the Euro Yen. Once again, here yesterday we were noting this as being 5 waves up here, and we're looking for a correction back, and then trading another 5 waves up through to here up to 142. So that's as far as we can really tell as such in terms of corrective moves up. And this may be a bullish move up too, by the way, because we'll come out of a correction down through here. So we're at 142, so, and you can see the market is starting to work with it a bit. So this move here can be something like this before it moves up here. Now, what point that we come into here to recognize if we're wrong with that particular pattern is 142.30 here. If you get a nice solid support on top of 142.30, then just go long from that point there, okay? But do look for some sort of support there and try and understand what wave count that you have in this space here. Otherwise, you'll get this 3-wave here, and then you'll look for support on the 142 and build the trade in that way through there. But it can fail from here, so that's why you don't want to go long right now. You have to wait for the 30 to become a nice tested support, or you have to wait for this to move down through here, and that's because you get trapped there, a trap for young players. The pound yen, also the same as well. Yesterday we were talking about going long off the 171 and getting to 172. Now this will start getting overbought up through here, and it's just expect a correction across here for sure. So yes, it can go up here further, but it's better to wait for the correction and then look for support, and that way it's a safer trade to the upside there. But there is enough sort of zush in here to get it higher up through here, because these 1s and 2s here I don't think have played out as 3s and 4s and 5s over here. So still more to go there, but definitely wait for support there as such. Yeah. Alrighty, that's it. Cheers.